Hey everyone, welcome to the KE Report, a daily editorial on April 15th, Tuesday. We are chatting with Jim Tassoni, CEO of Armor Wealth Strategies. We bring Jim on the show every month because Jim is an active trader. He's a momentum trader, not so much on the short-term aspect, but looking to play some midterm trends and momentum. And Jim, I feel like we chatted with you last month. There was a lot for us to talk about. There was some still decent momentum in some sectors over this last month. Good Lord, it's been all over the place. Volatility has been the key standout. And quite frankly, I can't see where much momentum is right now. There are question marks all over the place. These markets arguably in a downtrend, at least a short-term downtrend, but the rebound over the last few trading days, maybe we just put in a bottom. So Jim, where's the momentum out there? What are you seeing in these markets?
Yeah, Corey, it's definitely been an interesting market, and I don't know if it was a good thing or bad thing. We were chatting a little bit offline. I actually was out of town. We did a 2 week vacation with the family, and we were somewhat remote with spotty internet connections. So maybe that was a good thing, kept me from over trading these markets, which I probably would have been prone to do. But finding the momentum in here, like you said, I mean, whipsaw city. And we right now, though, we think there's been a fair amount, at least in our kind of 1 to 3 month time frame, which is sort of our sweet spot for our trades. We think there's been a fair amount of technical damage done to especially the US markets. And so right now, we don't really see any area from a broad index and or broad sector standpoint that really stands out to us as a place we want to get too actively long in. And as a matter of fact, on this bounce back, we actually took the opportunity on the open yesterday to initiate a short in SPY in the SPY ETF. And we put on what I call about a half size position in that if we got up to like the 551 level on a move a little bit higher, we think that might be an area that we might want to then initiate a full size short position. So, although we are momentum traders, we think the momentum is still to the downside, and we just want to sort of pick our spots here because of this whipsaw and volatile action. We're being very careful and I guess minding our stop losses as well.
Well, Jim, just to that point, if you put on a bigger short position, if there was a bounce a little bit higher, where would you take off the short? Where do you see the downside being in something like the SPY?
Yeah, so I mean, we think that there's a good potential that we go down and test that low that we made during that quick downdraft, which is roughly 482, 481.80 to be specific. We think if we got down in that 482 area, I don't know that we would take off the whole position, but we would definitely manage it down there, take some profit, probably move our stops down to protect the profit and look to hold from there. We think that in all probability, there's a high likelihood that those lows are not in and that we could see them. Now, conversely, because it's always important to me anyway, to know your second trade first and where we think we'd be wrong. And so if we saw a daily close above 570 in the SPY, that would change, in our opinion, the tenor of the market. And then we would probably get a little bit more constructive, at least get neutral and be a little bit more open to the long side. But until we can get a daily close above 570, we're looking more to the short side than the long.
Jim, what about small cap stocks too? We had a trader on yesterday who was saying that in these volatile markets, small caps really tend to struggle. So he was sticking more with some of the larger cap stocks and trading those. Again, more of a short-term trader. Do you carry that same mentality that small caps in these type of markets, they lag?
Yeah, absolutely. And we don't talk about small caps a lot when I've been on, but we have in the IWM, we have some, and I'll caveat with we've got a couple of individual small cap positions that we hold, but broad-based IWM exposure, we've never liked the IWM, and I've talked about that for years. We just think that any index that's constructed with roughly 60 or more percent of the companies in the index being unprofitable. It's not an index that I've ever really been that interested in holding. I've picked my spots. I'm not saying I've never gone long it, but we actually initiated a short a few weeks ago before I actually went away in the small caps at about 207. So that's been a good trade for us. We've obviously had a huge bounce back from the lows down at 171, retracing back up to 186 here. But we continue to hold this. We've got our stops in now at about 198. So we know we're booking at least $9 profit on that trade that we put on a couple of weeks ago. And we'll continue to hold the short down here and just manage that position. So that's been a good one for us.
Well, Jim, as far as things that are profitable, it's been hard to find out and suss out which markets actually are profitable the last couple of weeks and all the volatility. But there's one that does stand out, and that's gold. Gold really was the beacon of light. It acted like a safe haven, even when bonds and the US dollar were not getting a bid. What's your take on the precious metals right now?
Yeah, we continue to be long and strong gold, and we have been for several weeks now. We reinitiated. We had a nice gold position that we held for almost a year. We got stopped out of our longer term gold position towards the back half, the fourth quarter last year when we got that pullback and correction. But then in early February, we initiated a new long position and we've been long since. I don't know specifically if I would back up the truck here at these levels. I think I still like gold for the long term. If you're looking to have a hedge in your portfolio and something that's hopefully a little bit uncorrelated if the markets continue to be volatile, I'm a big advocate of having some gold in your portfolio. If you're a more active trader like me, our signals are flashing a little bit of an overbought sign here. So this wouldn't be an area that I would necessarily love to just run into. But if I'm looking, and I'm just looking at my chart here, if I'm looking for an area, we'll go with the futures, and I'm happy to do it on GLD too, depending on what our listeners would prefer. But I think if we got a pullback, and I know it's a fairly decent move from here, but I think if we got a pullback into and with the volatility, it could be here tomorrow, but back into that like 29.75 area on the futures, I think that would be an unbelievable place to pick this up.
There any extension targets on the upside? I realize that gold's overbought here, but quite frankly, it's a bull market for gold, and overbought conditions can last for a while. I realize that it's pretty much at all-time highs, or recently was at all-time highs. Any levels to the upside that you could see as a potential top or a pause, a longer-term pause period?
Yeah, I mean, we kind of had our extension targets up here at about 3,200 and we're trading, $40 above that now. So that's sort of hit that target. Our next extension target, if we're just sort of extending out, I mean, if this thing gets legs and continues to have the momentum, and I don't want to be one of these like gold to the moon type guys, but 3,500, 3,600 could be the next stop on this thing. I don't see any reason why we couldn't see those levels. I just don't know if it's in a straight line or if we get some check back before we resume the march. But I do expect us to see 3,500, 3,600 at some point.
Jim, just curious how you're looking at the rest of the precious metals complex when you look at something like GDX or GDXJ. Any thoughts there or any thoughts on silver?
Yeah, so GDX, and we were talking a little bit offline. I got the old whipsaw on this one. I put a long on before I went out of town at about $44. Had my stop in at 40, or excuse me, at 40.50, and the low of that candle was 40.26 of the weekly candle when I was gone. So definitely got stop run a little bit on that before it shot back up. I am not in GDX right now, licking my wounds a little bit there, but I do have a order out and it's sort of run away from me here. I was hoping when the week started to be able to buy this thing if it came back down to 47 because I just I don't know. I mean, maybe I'm like a cat on a hot stove or something, but I'm nervous about chasing too much here just because of the volatility and the whipsaws. I'd rather pick my spots and be a little bit more conservative and preserve capital to fight another day. But if we got to check back to 47, I think I would be a buyer in GDX. I definitely see it as a bullish pattern.
What about copper too? Because boy, oh boy, copper, volatile like everything else. It was one of those weeks, and it has been a few weeks now where volatility reigns supreme and it touches every market. Copper was at all-time highs and then dropped more than $1 in no time, has since rebounded, but I guess more or less in the middle of this wide trading range right now. Anything going on with copper? How would you trade that market?
Yeah, copper's another one that it has been a difficult trade here because, like you said, I mean, it's some wild whipsaws, and right now, I mean, the break of that 462 level was pretty 461.85 to be exact. Was pretty significant technical damage to us. And now with us trading sort of right back, in that area, it's a little bit of a no touch for us here. I think you could go either way. I think you could find reasons to say, okay, we broke support and now we're checking back to certain support and support becomes resistance. So maybe there's a short opportunity here. On the flip side, if we retake these levels, maybe we're going to go back up and test the highs. A key level for us is 480. We want to see how this commodity reacts at the 480 level if and when it gets there. If it gets to 480 on a daily and can't close there, we would probably look more to the short side on this. A close above 480 and we could see a resumption higher. So keep an eye on 480. That's a level we're looking at. I know we're a bit away from that right now, but with these markets, we could be there by the time this conversation ends.
Okay, Jim. So some good targets there for listeners for Dr. Copper. Do you have any thoughts on traditional energy? Oil was another market that really dove down out of its trading range, and the oil stocks and XLE just totally fell out of bed, but it looks like it's recovering a little bit now. Any thoughts on traditional energy?
Yeah, I mean, this has been one trade that we've gotten mainly right. For all the trades we've been whipsawed on the last couple weeks, we've maintained a short for the back half of last year, either a short or a negative outlook, stayed away from the energy trade in general. We've been short crude oil. That's been a really nice trade for us. I mean, we've been short roughly from about 77, $78 in crude and ridden it all the way down here. We've got our stop now in here at about $69. So for us, 69 is where we'd be looking. If we get and again, we're big daily close guys. So if we get a daily close above 69, we think that takes us into a range. And there's a possibility then that we see crude move back up into the mid 70s with a close above 69. But as long as we stay below $69, stay out of those 70s, I think you still want to look at any pops as opportunities to either add to your shorts or initiate shorts. So we're still short crude. It's been a good trade for us and we maintain our negative stand.
Jim, let's look internationally then, because as volatile as US markets and even commodities have been, international markets have also been volatile, but I feel like they've been a little less volatile, but still very much same direction or lack of direction, I think, that the US markets have shown. Last time we had you on, we talked about Europe and Chinese ETFs. Any opportunities in international markets?
Yeah, there's a couple of international markets that we still like. We had some really good trades on in Europe. We took those off and booked some profits amidst this volatility. We just again we're erring on the side of caution, and I've been trading and investing for 20 plus years, and I've learned my lesson. When you get into markets like this, for me it's better to dial back, throttle back a little bit, be a little bit more conservative, preserve cash, be selective. And so that's what we're doing. But we still are and still do maintain long positions in a couple Asian markets. We still like Japan. We still are long China via the FXI, and then obviously I've got some individual positions, BABA and the like. But our Japanese position is underwater a little bit. We initiated an EWJ position at $70, and we're trading here about 67.35. So we are underwater there. If I'll be 100% honest, if I had been in town and not, out of the country with spotty Wi-Fi, I probably would have puked this position on that huge pullback down to, under $60 last week, but hung on, saw the rebound. So we're still long Japan, and then the Chinese ETF too. We still like here. We think that, if you see a daily close here now below 30, that would probably be, where we would get out of this trade and wait to see what happens. But for now, as long as we hold 30 on the FXI, I think there's room to the upside. We don't see any resistance here really until we get into that $37-$38 range. So there could be some more upside here.
All right, Jim, always great chatting with you. Very interesting to hear how you're trading these markets and what is going to go down as a historically volatile, at least first half of the year, but who knows what we're in for. So much of this is around geopolitics and trade wars. We might have a little pause in the trade wars now. That is where this rebound could be coming from, but who knows what's coming next? And quite frankly, who knows where the leadership is going to shift to, because I think all markets are looking for where the next leaders will be. Again, Jim Tassoni is the CEO of Armor Wealth Strategies. Click that link in the show notes to follow along with what Jim is trading. Jim, thank you as always for your time. Great chatting with you this week.
Thanks, Corey. Stay safe out there.